Welcome in, everyone, to a special year-end planning episode. I'm your host for today, Evan Ross. I'm a tax director with Brown Edwards and Company, based out of our Roanoke, Virginia office location. For any of you out there who are unfamiliar with Brown Edwards and Company, please go check out our website at your convenience. A link to that website can be found in the description of this podcast. You'll find more information on some of our other locations, as well as our service lines and some of our other providers. We appreciate the opportunity to speak with the Richmond community, Richmond area, and to bring you this content throughout the month of November. Before we get into the content for today, I would just like to self-advertise for a minute. Brown Edwards also has two other podcasts. I host one of those podcasts. That is the Real Estate Tax Playbook. And we also have the Constructive Conversations podcast that is hosted by Eddie Thompson out of our Charleston, West Virginia office. The real estate podcast that focuses on real estate investors and developers, trying to create a game plan for them. Constructive Conversations obviously is all about construction. So if either of those topics interest you, please go check it out at your convenience. Links to those podcasts will also be in the description of this podcast. With all of that, I would like to introduce to you our guest for this special episode. We have Jacob with Brown Edwards as well, out of our Richmond, Virginia office. Jacob, thanks for being here with us today.
Yeah, Evan, it's great to be here. I'm looking forward to giving some more information on the expiring tax cuts and some more information regarding each of the candidates' plans for their tax proposals as well.
Definitely. Yeah, I've really enjoyed this hosting process. It's given me an opportunity to interact with a lot of other people throughout the firm. So it's great that you and I are able to work together on this episode. So anyways, I'd like to give you an opportunity, just kind of give some background on yourself, kind of your career path and kind of what you do for Brown Edwards and Company.
Yeah, so my name is Jacob Favreau. I've been with Brown Edwards for the past 2 years now. I've been in public accounting for over 25 years. I am a tax partner in the Richmond location, and I service small businesses and the owners of those small businesses, as well as some high net worth individuals. So serving the Richmond community, pretty much anybody can be a client of Brown Edwards.
Great. Well, we appreciate you, as I said before, getting on here with us today. Obviously, we kind of alluded to it earlier. We're going to be talking about kind of year-end tax planning, as well as some of the expiring tax legislation, and maybe touch on the presidential election as well, since that is coming up in just a few days from now. So with that, we'll kind of start, if it's okay with you, kind of start with the Tax Cuts and Jobs Act of 2017. A lot of that legislation impacted families, individuals, businesses, and obviously a lot of those rules, legislation is expiring starting at the end of 2025. Let's just kind of talk about those expiring rules. We can start with individuals, if that's okay with you.
Yeah. Just about every one of the provisions in that act is set to expire at the end of 2025. Some of the larger ones are the ones that you see most on the individual side. With the Tax Cut and Job Act, it increased the standard deduction quite a bit and got rid of the personal exemptions, tried to combine those two things together. So that part's going away, so you'll have the separate standard deduction from basically what it used to be, adjusted for inflation, as well as you'll get exemptions again, also adjusted for inflation. Exemptions will probably be close to $4,000 per person. In addition to those things, on the itemized deductions, the cap for SALT taxes is going away. So there'll no longer be a $10,000 limit on what you can deduct for income taxes, property taxes, and real estate taxes combined. So that's going away.
Yeah, obviously the SALT one's interesting because obviously the point of that was that came into play. We've created a loophole through the Virginia PTET election. We put a lot of effort into making that election for a lot of our clients.
So the PTET can still be beneficial to those individuals just because AMT basically removes any state tax deductions that you get as an itemized deductions and adds them back for AMT. So for those individuals, the PTAC could still be a pretty good tax saving standpoint.
Great. Well, thanks for making that point regarding AMT. So, kind of talked about individuals, we talked about the standard deduction, and we talked about the SALT cap. Let's move over to businesses. What are some of the expiring rules, legislation related to businesses they need to look out for?
Yeah, for businesses, some of the things that expire are the 199A deduction, which is basically another name for the 20% deduction that you get off of your federal taxable income from a business for qualifying income. So that will go away. The interest expense limitations are going to go away. And probably the biggest thing that you'll see some changes on relates to bonus depreciation. That's currently being phased out. The past couple of years has been phased down. It was 100% all the way through the end of 2022, 80% for assets placed in service in 23, 60% for assets in 24 this year. It's going to 40% for assets in 25, and then basically reverts back to no bonus depreciation, which we haven't really seen that for over 20 years. So that really started with the some of the Bush cuts from early 2000s.
Yeah, bonus depreciation. That one's one that I kind of care about the most personally. I do a lot of real estate, as I mentioned earlier on the Real Estate Tax Playbook podcast. And a lot of those do cost segregation studies. I won't get into the meat of that right now, but obviously that's a big advantage that taxpayers have been able to take advantage of with bonus depreciation. I do feel that bonus depreciation is going to be around in some capacity moving forward. Obviously, you said it's been around for 20 years. I don't think that is going to change, but I do see that being a high ticket item in the coming months and years.
Oh, I certainly agree with that. As it's written right now, subject to any change coming forth, it's set to expire at the end of 25. But that's one I fully expect to get extended by either candidate.
Yep, I completely agree. Well, with that, I mean, we've kind of spoke on the TCJA, what's happening there. Let's move on to the presidential election. That's obviously coming up right now. Early voting has been in process for a couple weeks at this point in time. So let's kind of talk about each candidate's tax proposals, what they bring to the table, and let's just discuss that. So obviously, VP Harris has a number of tax proposals. Can you kind of just go over some of her larger tax proposals and how they would impact the economy?
Certainly. Yeah, one of the first ones that you come across was the corporate tax rate was a flat 21% before, and currently still is. And she wants to raise the top rate on corporate earnings to 28%. So that's a 7% increase. And then on an individual taxation side of things, she wants to raise the top rate from 37% to 39.6%. And that's not going to really affect you until you have roughly $700,000 of taxable income. In addition to that proposal, for individuals that earn under $400,000, she actually wants to extend a lot of the TCJA that we just talked about expiring. She wants to extend that for the individuals earning less than $400,000. Additionally, the long-term capital gain rates and qualified dividend tax rates, they're currently at a top rate of 20%. She wants to increase that to 28% for individuals with income over $1 million. Related to your real estate, she wants to limit like-kind exchange and deferral of gains. She wants to limit the total gain deferral to $500,000, which would be a pretty big hit to the real estate market. And then, in addition, she wants to tax unrealized capital gains at death when they're above 5 million or 10 million joint taxpayer. So there's a lot of tax increases in her plan. One of the tax savings would be a $25,000 tax credit for first-time home buyers. So that would be a pretty good benefit for those individuals.
Definitely a lot to consider. Obviously, a lot of hers impact a lot of investment income and property as well. Like you said, the 1031, that definitely impacts a lot of my clients. We see a lot of 1031 deferral strategies, so that could definitely impact real estate professionals, investors from being able to utilize that to the full extent they have been in years past. So we'll see what happens. The big one too, I mean, with the capital gains rates increased, I feel like that's probably not going to sit well with a lot of individuals. What's your take on that?
Yeah, I agree. The stock market's obviously been performing fairly well the past couple of years. Some really big gains over the past year, even though there was a little hiccup during the summer. The gains since then have more than made up for that. So that would be a pretty big impact to individuals who are basically living off of their savings that they've put into the market. So
Yep.
it's basically an 8% haircut for them.
Yep, completely agree. And then kind of going off that, you mentioned people living off that. So we talk about retirement. We didn't mention it earlier, but the estate tax exemption. I don't know if you want to touch on that at all. And obviously that's set to expire. So there's a lot of planning that can be done on the tax side there.
Yeah, so the estate tax, currently there's a roughly $14 million lifetime exemption, and that's combined between estate and gift taxes, and that's set to expire at the end of 2025, and it basically would be cut in half to around $7 million starting for 2026.
Yeah.
So that there's definitely some planning that could get done between now and the end of 2025 if you have a large estate or one that's kind of in between those two numbers now and you'll end up having a taxable estate. It's a good time to do some planning around potential gifts. Get some of that money out of your estate now so you can escape the estate tax later on down the road.
And we obviously, Brown Edwards, we have a very well-versed estate group. Betty Jesse leads that group. So if any of those folks listening out there are curious about that and how they should plan and consider gifting to individuals or trust, what they should be doing, please reach out. We'd be happy to assist with that. Moving off of President Harris, let's talk about former President Donald Trump's kind of tax proposal, what he is looking to do with tax legislation.
Yes. So all of the expiring tax cuts that we mentioned a few minutes ago, he would like to extend all of those except for the SALT cap. So the $10,000 cap, that would still expire under his plan. In addition, he would reduce the corporate tax rate for domestic production. He would increase the deduction from 20% to the 28.5%. So that 199A provision I mentioned earlier would go from 20 to 28.5. He would also repeal some green energy tax credits. So those would be going away under his plan. And he would make permanent expensing of machinery and equipment as well as research and development. So all of the benefits that are enjoyed currently with that, he wants to make those permanent. So the bonus depreciation would be permanent under his plan. And then the research and development credit, he would make that a permanent credit. That seems to be one that gets passed every year just to extend one more year. So that one would be made permanent. In addition, Trump would like to make tips and overtime exempt from income tax. And he would also like to add auto loan interest expense to itemized deductions. So those are basically some tax cuts for a bunch of individuals.
Yeah, the overtime, I thought that was kind of interesting. I feel like that could potentially shift the labor market if overtime pay was exempt from those taxes. That could be a very large impact on how employees want to get paid, how they're structuring contracts. What's your take on that? I don't know if it'll get passed, but
Yeah, if that gets passed, just like you said, it could structure the impact on how employees would want to get paid, because instead of getting taxed on all the extra work they're doing each week, it would just be exempt income. So they would be able to keep more of that, whereas they were not before. That could put a strain on some businesses, though, because that'll cost them more. They'll still be paying overtime rates. It wasn't really costing it before. It wasn't really costing the business anything other than the time and a half or whatever their overtime rate was. But now, if more individuals would like to kind of restructure their pay, it could put a little bit of a damper on some of the business earnings.
I completely agree. And obviously, I mean, each candidate has their own proposals and what they want to do. Obviously, this all has to go through Congress, through the House, through Senate before it even gets to the president elect to then vote on and sign into law. So just because you're seeing all these things, all you listeners out there, doesn't mean every single one of these items is going to get passed. Obviously, so just wanted to throw that piece out. I don't know if you had anything else to add in that area as far as that process and
Yeah, obviously it has to get passed by the House first, and then the Senate, and then the president. So if the House and Senate can't agree upon a bill that includes some of these things in there, or not, or any of these things in there, then nothing would get passed. So sometimes when the House is one party, Senate's another party, it's kind of a good checks and balances. So there's not a huge overlap and not total control of the country, basically.
I agree. And I think in the House I think there's multiple seats up for grab. I think there's 3 seats up for grab, I believe. So not only does the presidential election matter, but also some of those other congressional seats matter as well in this upcoming
Certainly.
election. So very good. Would you like to kind of compare just kind of the economic impact of some of the candidates' tax proposals?
Yeah, so there's been a study done, and some of the economic effects of Trump's tax proposal. So the gross domestic product would be about a 0.8% increase from the proposals. Gross national would be a decrease of 0.1%. Capital stock would be an increase of 1.7. Wages, would be important to listeners, would be an increase of 0.8%. His plan seems to call for the equivalent of almost $600,000 of full-time equivalent jobs, and it would increase the debt to GDP ratio through 2065 by about 200%. So there's quite a bit of different impacts that could certainly have on the overall economy of the U.S.
Yep. Obviously, debt that continues to increase in the U.S. economy. So I think that's just unfortunately become one of the expectations we've become to know this day and age. So, well, very good. Anything else you want to add as far as year-end planning, the presidential election? Anything else you'd like to add to this conversation?
Just for year-end planning, you still have some of your normal planning ideas that have been around for a couple of years now. So the PTET certainly helps out quite a bit if you own your own business. So that'll help out on the federal tax side and not really cost you anything on the state side. And that's not just in play for Virginia. That's a lot of other states as well. I think it's over 30 states that now have something PTET related, pretty similar to Virginia's laws. So there are several states out there that have that. In addition to that, I think the estate planning piece of it, that with it set to expire at the end of 2025, I think a lot of planning, sometimes those ideas take a while to get to the finish line. So whatever you can do to start early with that and get those done now would definitely make a lot of sense.
It's never too early to start with your tax planning. So obviously, feel free, all of our listeners out there, to reach out to Jacob, reach out to myself. If we can't help you, we'd be happy to point you to another individual at Brown Edwards that specializes in your area. So don't be afraid if it's not our specific industry. Don't be afraid to reach out. We'd love to help you any way we can. Jacob, before I wrap up this special episode, if you could just provide your contact information if anyone does have follow-up questions for you specifically.
Sure. My name is Jacob Favero, and that's F like in Frank, A, V like in Victor, ARO. My direct dial is 804-601-7052. And my email is the letter J, last name Favero, at becpas.com.
Great. Well, I appreciate it. Thank you for bringing us this content. That's a wrap for this episode for Richmond Biz Sense. We appreciate all you listeners out there for tuning in today. As I mentioned before, if you are interested in real estate or construction, please tune in to either the other podcast that I host, the Real Estate Tax Playbook, or the Constructive Conversations podcast at your convenience. There's a lot of episodes out there, so please go check those out. Appreciate the opportunity to bring you this content for the month of November. We hope you all have a great day. Take care.